Hey guys, today we're going to be explaining about the stock market. People often throw around the word stock market or investing and immediately declare them as either the ultimate moneymaker or just straight up gambling in disguise. But what exactly is the stock market? Well, the stock market is a place or market where activities of buying and selling and also issuance of publicly listed company stocks happened. Besides stocks, the stock market also sells things like financial securities such as corporate bonds and derivatives based on basically everything out there like currencies, gold, bonds, stocks, and etc. But today, we are only going to be focusing on the stock aspect of the stock market. So let's get into it. The stock market may seem complicated, and it is, don't get me wrong, but it's basically just a way for you to take part in funding a company that will use your money to fund more projects or initiatives in order to make a profit out of it. This will essentially make you a partial owner of the company that you invest in. Companies need to do this because the stock market allows them to access more money, thereby making their company business bigger and able to compete with other companies or their competitors, which also get their money from the stock market. However, there are several steps needed before a company can be listed in the public stock market. First, a company will try to advertise their ideas to these big investors. And if the big investors think that this company is going to be profitable, then they will decide to invest in this company until it becomes truly profitable and able to sustain itself in the long run. These early investors are often called the venture capitalists. After that, usually, a company will try to do what's called an initial public offering, or more commonly known as an IPO. This will enter the company into the public stock market where us, the common people, can try to use our money to buy and sell the company's stocks. When you buy a stock, a company will use that money to fund their projects. And if they're successful, they will give back those revenues that they get from their businesses to their stockholder, i.e. you, the investor, by the increase in their stock price, of course. Finally, you can sell off the stocks that you owned at a higher price point to get some revenue out of your investment. If a company is successful, more investors will see that the company is profitable and they will invest more money, thereby increasing demand for that company's stocks, which will increase the value of the company for prospective buyers. So you can kind of see the trend here, where one thing leads to another and it keeps going on and on. However, on the flip side, if a company is unsuccessful, their stocks will go down hard because they will lose money and, well, simply can't pay you back at the initial price. However, in this scenario, investors will also try to sell their stocks in hopes of making a profit before the company's stocks go down even further, thereby reinforcing this trend, resulting in price and demand falling even further down for the stock. In order to prevent this, companies usually like to influence their own stock price by doing what's called a stock buyback, which is using money from their profits or their investors to buy up their own stocks in order to artificially increase their stock price by increasing demand. There are still many other factors that can influence the price of a company's stock, such as the price of new materials, technologies, change in leadership, and many else. Even something as seemingly benign as a I don't know, a tweet from a company's CEO? Yeah, that will also influence a company's stock, either higher or lower. Investing used to be mostly inaccessible to the common working class. However, this has all changed since the advent of the internet. Now, there are all sorts of ways that you can try to invest and even check information about stocks. There are mainly two options though where you can buy and sell stocks in Indonesia. The first is by doing it through the brokers. This is the traditional way of investing where people go to a broker's office and they decide which stocks they want to buy and they just buy it. The second is through an online application. This is the easier way of investing. You're still going to be doing transactions through a broker, but it's done through an online app, which is much more simpler. First, you can download any app that is certified by the IDX or the Bursa Efek Indonesia and OJK or Otoritas Jasa Keuangan, which is the official government organization for managing investing and banking. You can check whether your apps that you're using are certified or not by looking at the website of IDX. Then you need to create and deposit a certain amount of money into your account. Then, finally, you can choose which stocks you want to buy or sell yourself by clicking on the apps. That's simple. There are many ways to invest depending on your age, personality, knowledge, plans, and etc. For example, at the start of your life, it's probably better for you to invest in company stocks as it has more return rates. However, as you're getting older, you may want to de-risk your holding into one filled with government bonds because, well, it is more stable. But the most important thing in investing is, according to many experts, you should treat investing like saving, not gambling. The best way to start investing is to set aside some salary at the end of each month or at the start, depending on where you get your paycheck. Then, instead of putting it all in the bank, you should try to put some of it in a diversified stock portfolio. A diversified stock portfolio is a portfolio that consists of several companies in a lot of different sectors in order to minimize risk and promote stability in the stocks that you invest in. Then over time, your stock collection will build up until at some point you will hopefully be able to retire peacefully and support yourself just from the money generated by the return rates of your stocks, which is amazing, right? This plan is becoming more and more popular around the world, gaining traction and the nickname of FIRE or Financial Independence, Retire Early Movement. Investing is undoubtedly a difficult process. The inherent complexity and volatility of stocks don't help either. However, this process has become easier in recent years with the advent of the internet. In this era of globalization, stock investment has become an alternative and easier way to invest in comparison to, for example, a property investment. However, we must be aware that stock is an investment, not a fast way to gain money. It is not a miracle and it must be treated that way. I personally think that with an expected growth of 12.16% annually, which is huge by the way compared to the 4 to 6% of bank deposits and a meager 0.25 until 2% in a regular bank account. Stocks are very profitable and possibly one of the best stable investments that you can make. So, in conclusion, invest responsibly. Thank you.